Hey everyone, it is Evan here from the Trade Risk on Tuesday, January 28th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we got plenty to talk about. Volatility is here still. We are seeing two-way trading back and forth, elevated ranges, largest we've seen in a few months. So let's jump into it here with our technicals dashboard. You can see on Tuesday, markets did rebound fairly aggressively. We were up just around 1% right across the board in all of the major indices. Of course, over the past 5 days, you can see we are still in negative territory across the board, and we are still below, or we are now below the 10 SMA across all of the major indices. If we scroll down and take a look at sectors, we only have utilities here, which are in the green over the past 5 trading sessions, followed by tech and industrials. And on the downside, we have energy, biotech, healthcare rounding out the underperformers. In terms of major markets, it's all volatility here. So VIX at the top of the list, 26% pop over the past week. I think if you actually take the recent lows from just, a week or so ago, in VIX to the recent pop, yesterday's highs, I think it was about a 60%, 55% move from low to high. So a very impressive range there. But as it stands now, 26% pop. TLT is to follow, and IEF number 3, which are kind of the mid-range, mid-year bonds, 10-year bond fund, around that duration. On the downside, oil, China, emerging markets, all very firmly in the red. Oil minus 8%. Big unwind there is really just continuing, not just getting started. So let's jump into the charts. Let's take a look at where we are in the big picture. This is a weekly time frame of the S&P 500. We always like to start with the weekly chart to give us that big picture view of just what the big trends look like. And when we look at this view here of the S&P 500 on this weekly time frame, you can see we've basically been in a very uninterrupted uptrend here, or in this rising channel, since the start of October. Pretty much the start of October, we've been grinding higher here, very little volatility, and look where we are now. You can see that we are trying to, or for the first real time, kind of breaching the lower end here of this channel, of this trend line support that has been guiding price higher. Now, of course, with the rebound we saw on Tuesday, this candle looks a little more healthy here, but this yesterday certainly into the close and intraday was trading more around 32.50 and looking much more pessimistic than it does right now. But from a big picture perspective, you can see that really the weekly close this week, I think, is going to be very important and very telling of sort of the near-term direction and behavior of this market. Because if we effectively close where we are now or higher come Friday of this week, then I think the bulls actually have done a really good job at saving this market, stepping in and kind of buying the dips, so to speak. But if we do end up rolling over from here, if we do revisit the lows that we saw yesterday, and we close below, 3270, 3260 or so, that's going to still set us up and keep us in a much more ominous sort of pullback mindset for this market. So the weekly picture here, the weekly close for the S&P 500, I think is going to be pretty important. If we go down to a daily chart, and again, just kind of map out this action here, you can see this is the channel that we had drawn. Again, it's not made to be super precise. You can certainly maneuver these lines as you see fit. These are just sort of general guidelines here. But as we, look at the recent action, Friday's bearish engulfing day, which we did talk about as a short-term sort of day to take notice, was the start of this, or was the real meaningful kind of pickup of this sell-off. And we got that follow through right away, right out of the gate yesterday on Monday to start off the new week. Futures gap down on Tuesday, on Sunday, and the market gap down to start start the week off on Monday. So we got that follow through. it it immediately sort of stopped the bleeding here with today's bounce. And, we have a big session of earnings this week. We have, I think, Fed speak this week. And, all in all, just a busy week, especially what's going on and certainly in the macro environment as well. So the S&P 500, as it stands, recovering here on Tuesday. Yesterday's lows, these are going to be our near-term reference levels, line in the sand, if you will. If we switch over to our other view here that we were looking at as prior support levels, you can see we did briefly undercut this 3260 area. We popped back and closed back into this range here. So we're still now kind of waiting to see how, again, how this market follows things up after this busy earnings week. But so far, short-term trend is broken, loss of some momentum, and basically just some two-way trading. I think that at the end of the day is really what we could expect here. Just some ranges to stay elevated as the market kind of makes up its mind, digests the headlines, the earnings, and everything that's going to get thrown at it this week. And I would just expect at least a little more volatility, two-way trading, and depending on your time frame, depending on how active you are, that may or may not be meaningful. So this really is the picture here for the S&P 500 levels to pay attention to. Again, 3,300 on the upside. If we started to close back above there, then the bulls, I think, have done a pretty good job at containing this rally. On the downside, 3,260, and then yesterday's lows around 3,235 or so. That's what I'd be paying attention to. If we look here at the VIX, as we mentioned at the top of the video, you can see we're closing around 16, but we got as high as 19. And again, if we kind of just draw just from recent lows here up to 19, we get about a 55% pop. If you took it from the actual lows, which were lows in VIX on the January the 17th, you're talking about a 60% move here in the VIX from low to high. So definitely a scramble for protection here over the past couple of days. Again, historically speaking, I think the long-term average of VIX is right around 16 or so. So when we look at where we are right now, it's certainly higher than we were and where we've been for a lot of recent months. But from a historical perspective, a 16 VIX is not that crazy, slightly above average, but all in all, kind of, a routine average. So that's the VIX. That's the look there. It's coming off of the highs here, and we'll see how that sets up into the end of the week as well. The Russell 2000, of course, we mentioned this one last week, where the sort of move that we saw last week was not what we wanted to see for the Russell 2000. In other words, last week's action, the Russell 2000 basically gave back all of this nice looking kind of expansion breakout bar that we saw on the second week of January. It gave it all back here last week, and then of course now this week you can see it's still just kind of wrestling. It's down on the week, but still it's trying to hold on here, and this is an important zone for it. So right now the bulls are defending this important support area. This was and has been support for the start of January. Saw some hesitation and effectively was a breakout area in December. So for the Russell 2000, I think staying above this 163.50 to 164 area, I think that's a good line in the sand to use and something to pay attention to. Of course, we have the actual lows from yesterday on Monday, but I think this is going to be a good spot to pay attention to and watch. This is the first day up in about 6 trading sessions, so we're certainly not out of the woods yet, but this is a nice little miniature stand here by the bulls for Russell. We'll see if they can hold that up into the week's end. Last but not least is the NASDAQ. This has been the leadership group for us, and again, you have this nicely drawn, nicely kind of not nicely drawn, nicely followed channel here by the market, and you can see we did get that abrupt breakdown of it yesterday on Monday. You can see we're pushing back into the gap here and basically filling the gap down from Monday this week. You can see we're testing this trend line as well, so it'll be interesting to see if we can get back above here, get back on course, put in some type of higher low, and contain the damage for this market. So that's it from a big picture perspective there. Markets, short-term volatility, got some two-way trading, pullbacks in these markets, long overdue, right? So this shouldn't be tremendous. This shouldn't come as a tremendous surprise, just given the move that we've seen over the past 4 or 5 months in the markets. And whether or not this has run its course or not is something we'll look to see, towards the end of this week on these weekly closes. Let's take a quick peek at Apple here, just because I know this is reporting earnings. I don't think they've reported yet. After hours right now at the time of recording this. But of course, Apple being, pretty much the largest weight across a lot of the major indices will have some impact tomorrow as well. So let's jump into some other markets now. Go to TLT here. TLT started its breakout last week, continuing its breakout this week. You can see here on the weekly picture here, the weekly time frame for TLT. You're kind of getting this rounded look here, this consolidation that took place for about 5 or 6 months now through the summertime into the end of the year is starting to work itself back up. Again, get a little bit of a red, red intra-week progress right now, but we'll see how that sticks. We'll see how that continues. But for now, generally speaking, TLT momentum still remains to the upside. If we look at gold next, you can see gold also still, up and to the right here. It's pulling off of the highs that it made yesterday. So it briefly attempted to make new multi-year highs here on Monday. Those didn't quite hold. We got some follow through on Tuesday to the downside. So GLD didn't really, neither GLD or TLT are really off to the races, just skyrocketing higher. They're certainly in uptrends, and they've certainly seen some nice rotational moves, but they've lost a little bit of steam here in the short term. Silver losing a lot of steam here today. I think this is a very interesting move. This is a very loud move here for silver, 3.37% down, heavy volume. Remember, silver was certainly shaping up here, and we were keeping an eye on it. But as we've been saying, silver never really got the sort of escape velocity or that pattern here where it could really just kind of break out and clear all of the recent, supply. This got as high as the October range here, and then it started to pull back and consolidate. And now, of course, with today's move, really kind of retracing more of this December rally. So silver here is very much in kind of a tough spot and doesn't really look too interesting for me one way or the other. This certainly could be some type of washout in the short term, but right now just needs more time, really needs to get over $17 for momentum. Last but not least, if we look at energy, USO here been a tough story over the past 3 weeks. You can see it's basically been a kind of a collapsing move here from 13 and change all the way down to just over $11. Really gave back a lot of the October to December rally where it was grinding higher, basically unwound it all in about 3.5 weeks or so. It's certainly oversold and stretched to the downside right now, but something where you got to be cautious and nimble if you're going to play in this space. And natural gas, last but not least here on the week here, is going sideways, still in a downtrend on virtually all time frames here, still struggling to find some lows, but moving sideways, not for the faint of heart. Again, there's volatility if you're a short-term trader, but anything longer than that still is uniquely difficult and has basically been trapped in that downtrend. So that's it. That's what we got for this week's action. Let's take one more quick look at Apple, and there it is. So this is an interesting setup for tomorrow because we see that Apple is currently trading around 326 in the after hours. They just reported earnings 2 minutes ago, so this could very well be a different figure than where it opens tomorrow. But if Apple does in fact, gap up tomorrow and it can try and hold it, this does speak well or gives the bulls a little more confidence here as we got the rebound here today, that maybe they can hold on to it here if some of the big names are going to keep us afloat. So be interesting to see how this all shakes out, over the next several days. So that's it for me. Thanks so much as always for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here tomorrow for some swing trade ideas.